Hey everyone, Starting Trades here, and today we're going to go over moving averages. There are two types of moving averages, simple and exponential. And for this, we're going to use time period to describe the moving average time and the time frame for this chart time. Currently, we're on the daily. One thing to keep in mind that the time period chosen is particular to the time frame that you are on. If you choose this 20 simple moving average on the daily chart, it is looking at the last 20 days. On the hourly chart, it is looking at the last 20 hours. On the 15-minute chart, the last 300 minutes, which is 20 times 15 minutes, and so on and so forth. So when we talk about moving average and the time period associated with it, such as the 20 simple moving average or the 200 simple moving average, it is the average closing price over that time period. So for the 20 moving average, it is the last 20 days of closing prices added up and divided by 20. And the 200 simple moving average is just the last 200 closing prices added up and divided by 200, and so on and so on. The chart we are looking at here, the last 20 days takes us back to October 29th. And up to November 25th, which was just yesterday. And the average price over those 20 days was $10.75, as you can see here, the yellow line. Now, the 200 moving average takes us back to February 20th, which is basically this whole chart that you see here. And that moving average is $7.99. So the average price of the last 200 closing prices is $7.99. Now, when a new day pops up on here, the first day of the average drops off. So when tomorrow pops up here on the 11/27, then 220 will drop off and still keeps the average rolling. So this will see the price going up. This is probably going to move up then as of tomorrow. Now, when we talk about exponential moving averages, it is essentially the same thing, except that they put more weight on the more recent prices, causing it to react a little sharper to the price changes. If you would like the formula for the weighted prices, I'll be happy to share that, but for our purposes, we will stick with the broad strokes. So I'm going to pull up the 20 exponential moving average just to kind of show you what it looks like up against the 20 simple moving average. Let's throw that up here. So the EMA is the blue line and the SMA is the yellow. Look how the blue line makes sharper movements here and there. And it's a little tighter to the bars, as you can see here, where the yellow line is much more smooth. It's not making sharp ups and downs. It's kind of just going with the flow of the price. And it's also a little further off. And that's showing you the effects of the weighted on the higher prices. So that's really the only difference between simple moving average and exponential moving average is the weight to the price, and then you'll see how it reacts more. So that pretty much covers moving averages. If you have any questions, hit me up on Twitter or comment below, and thank you so much for watching. I hope these are helping. I'm trying to put out as much informational content as I can to just cover basics. So have a good Thanksgiving, and thank you again.